Good morning, everybody. I'm Zeinab Badawi, and Leslie, would you go here? And Ndidi, would you go there? And Hans-Peter in the middle. Good morning, ladies and gentlemen. It's very good to be with you. I'm Zeinab Badawi. I'm a broadcast journalist. I'm also president of SOAS at London University. And over many decades, I've followed the development world very closely. I was once on the board of ODI, and as somebody who was born under the African sun in the Sudan, but as you can tell from my accent, I left it a very long time ago, when I was 2 years of age, in fact. But obviously it's a continent that's very close to my heart, and want to thank you, Lord Connors, actually, for all the support you've given the Sudanese diaspora community at this very difficult time. But we are here to discuss the new 5-year strategy, and I've got 3 fine panelists to do that. I'd also like to invite some questions from you on the floor. We have to finish at 10, so those of you who do think of asking questions, do keep them nice and pithy, and I will turn to you after we've had a little bit of a knockabout here. So, Leslie, I've actually read the 5-year strategy, every word of it.
Wow.
I was very impressed. I mean, yeah, beautifully illustrated and, you know, very succinct and so on. But I came away with the idea, thinking to myself, you say you want to do more with less. And then I began to wonder whether you're actually trying to do too much with too little. Is that a fair comment?
I think firstly, I'm a bit intimidated being asked questions by you. I'm alumni of
I know you are, yes. So I'll be gentle with you.
As president, I feel like my professor is asking me a question. I think one of the important points that I want to leave with you is that as part of the shift, we will now no longer be reporting on or focusing on how much capital we have deployed. The metrics of success will be changing. We will now be asked from next year going forward, how much capital have you mobilized? So it's an entire change in mindset. Indeed, we are faced with a declining fiscal resources, which is, throughout the G7 countries, it is a reality. Advanced countries have to spend, and other countries have to spend more money on defense or national security, given the state of the world. So we take that as a given, and we are focused on multiplying and having that catalytic effect. So it's a change in the business model, and we believe that the ingredients for success are there.
I can feel all the energy you're emitting as this new catalyst in the neighbourhood. So Hans-Peter Lankes, you are Deputy CEO of ODI, and also MD there, but you've had a very long and distinguished career working at the EBRD and IMF, and you have a great deal of experience from various parts of the world, Southeast Asia, Central America, and West Africa in particular. So we've heard a lot this morning about the shift from the traditional development aid model to this kind of new investment-led economic cooperation idea. So what do you think that the 5-year strategy is actually capturing the zeitgeist, given what's going on with the retreat from development budgets and so on?
Yes, first, thank you, Zeinab. Thank you, BII, for having me here. And you're right, I have a history in this sector. And BII is, I think, the oldest representative of the sector. It was the first DFI to be created, and I think has been pioneering ever since. And this strategy, and you capture it quite well with Zeitgeist, is a very modern strategy. I think it gives reality to the catalytic role of the development finance institutions. Very much focuses on that. It's not about its balance sheet. It's about what is achieved beyond the balance sheet, and using it in a way to bring others into the market. So I think it's a very, very modern strategy. It's also an unusual one for bilateral development finance institutions. So the ambition to create markets is something that has been out there. I don't think there's any other bilateral development finance institution that has actually anchored that systematically in its work. And so to do this in a deliberate way, to create a culture around it, is a major step, and it's quite an ambitious step, as you said. I'm trying too much. I think that BI is capable of doing that. One thing, perhaps in that context, to mention is that in creating markets, it's important to be engaged with other players. and in particular to be engaged with the policy players. It's very hard through investments alone and with your private counterparts alone to say change the telecoms sector. You need to engage with policy on that. And that means bringing the policy side along. And that integrated approach that you see, for instance, in Mission 300, where BII is a party to, I think that's really the way to go. So it's this approach together with other parties that have leverage, that have abilities on the policy side.
And Mission 300, I'm sure you all know, is electrifying 300 million people by 2030, I think it is. Thank you, Hans-Peter. Ndidi Okonkwo and Nwuneli, you are president and CEO of One, which started off as a kind of anti-poverty campaign group, but you now promote investment and economic opportunities and entrepreneurship in Africa. And again, you're somebody with a great deal of experience both in the private sector and also in this world. So in terms of the 5-year strategy, BII, is it pressing the right buttons for you?
Thank you, Zeinab, and it's an honor to be here, and congratulations to Leslie and the team. So on face value, like we've said, it's a fresh approach, it's a modern approach, and we welcome it. But I want to first state that I don't think BII's investment should be an alternative to ODA. So you mentioned Sudan, and we still want to continue to put pressure on the UK to continue to fight for life-saving medicines and humanitarian support. And as the once President and CEO, I cannot start any remark without saying that, because we can't let countries off the hook for the most pressing challenges that we face today. However, investment is what is going to drive long-term sustainable growth and jobs in countries that are emerging and at that cusp. And so this is a welcome intervention. And I'm excited because I know that under Leslie's leadership, BII can achieve it. But I want to just stress a few points. Number one is that as we look at what is required on the ground, and definitely in many emerging economies, especially on the African continent, we are ready for investment. We need that policy landscape. The UK is well placed, and I would like to call on BII and many of the leaders in this room, given your development conference coming up in May, and the UK hosting the G7 next year, BII has to serve as the leader that is calling on other development actors to invest larger pools of money to achieve this. You said it's not enough money. We need more. We need to crowd in. So we need to use the BII strategy as an anchor to galvanize others. And as you have a few weeks to the May summit, what are we doing as BII to call on others to follow and crowd in more money? And how can we use the G7 next year to do the same? Yeah. Because for me, an enabling environment is about the right policies, but it's about significant resources. The data that One released last week at the spring meeting shows that financing in Africa, debt financing, has gone up by 91% because of the risk premium, because of the challenges we face around perception. And so BII is telling positive stories, showing results, and galvanizing others to come alongside it is critical. The second key point for me is really the opportunity to, as we say, look at systems change on the ground. And this is where investing alongside fund managers, but also pulling in governments and holding them accountable to do their part is critical. And I think the UK is well placed, and you talked about Ghana, to do that. Okay,
you've put a lot in there. So Leslie, you clearly have got an advocacy role to play there. Are you up to that? Yes, yes, I'm sure you are. So both Hans-Peter and Ndidi have mentioned the fact that you need to work with the policymakers, with because capital is a coward. We know that, and that's why you put a lot of emphasis, quite rightly, on de-risking. But you need to have the strong regulatory frameworks. You need to have often the digital infrastructure, as we know from your investments in Safaricom in Ethiopia, and so on. And so, how confident are you that you have got those strong regulatory frameworks in order to crowd in and bring in this private capital?
I think, as we highlighted earlier, and as the Minister and Diana also emphasized, our core theory of change, if you like, is that the private sector is the engine of growth. BII invests in private sector companies day by day. We do not engage, when we wake up every morning, we do not have dialogue with policymakers, with the ministers of finance and planning and so on. We are one actor within the development finance system. We intend to deepen in a very deliberate way the partnership model. The Africa Development Bank, the World Bank, the International Finance Corporation, EBRD, these are some of the other major players on the continent who have deeper expertise in the sort of policy domain. They've got numbers of people who study what is the appropriate policy to enable a competitive landscape in the telecom sector so that you have competition, so that the cost of data and high-speed internet can go down, and so on. This is about us working in a complementary manner where we leverage off each other's strengths and each other's complementarities in order to produce the development outcomes. We recognize where we have strengths, but we also recognize what falls outside our scope, but we are dependent on those. So we met last week with Dr. Ndidi, the President of Africa Development Bank. We are deepening our collaboration with the private sector arm of the Africa Development Bank. We are in regular dialogue with Odile, the President of EBRD. They have just scaled up. They're employing 100 people on the continent of Africa. They've got 6 new markets that they're entering. We also work in those markets. Our teams are dynamically connected to them. So this is really about perfecting that partnership model.
Does that sound like that will work? I mean, this kind of division of labour, as it were, you know, we talk about, we've heard a lot about, and you mentioned domestic resource mobilisation, which includes, you know, higher taxation levels in many countries, particularly in Africa, where it's very low, and, you know, the regulatory framework we've talked about, and trying to create the right climate. But BII is clearly saying, we're not going to do everything, we're going to work with these partners who Leslie's mentioned. It's the right approach.
I think it's the right approach. I think it's a very difficult approach. I myself have been working for many years in some of these other institutions, say in the World Bank Group, to try to get just the different parts of the World Bank Group to play together. So if you have a country strategy somewhere, there's the public side, there's sovereign lending, they have access to the finance ministry, they have, you know, they have leverage. Then there's the private side, and the private side would like to benefit from what the public side can do. It's been incredibly difficult there. So it's a, you know, good luck. It's a very necessary path to go. I think BII, I think the UK, I think if you can use your shareholder to do that, if you can use the G20 platform to get other key shareholders on board, if you work systematically in the boards of these other institutions to create the same kind of willingness to collaborate that we see here, then you can make it happen.
And Ndidi, BII has said, and one thing that I saw that was interesting in their report, and I know it's something you're very interested in, is the fact that 30% of new investments are going to be gender focused, you know, looking at financial inclusion for women, and also, you know, quality jobs and digital inclusion, not only financial inclusion, and also trying to progress women in STEM subjects, because, you know, you go to somewhere like Africa and it's all STEM, isn't it now? So that's very important. I mean, arguably, everything in the 5-year strategy should be seen through that gender lens, don't you think?
Definitely. I mean, I was really excited to see that commitment, but also the commitment to key sectors that can actually mobilize growth in others. And I think that link to key sectors, so energy access allows you to then invest in health, which is key, right? We do know the same with value addition in critical minerals that links to energy access. Even the prioritization of countries like Zambia and Sierra Leone were just exciting to us because we see them as key drivers of innovation and growth. I think one role, linking the partnership question to what Leslie said, is that as BII succeeds in these markets and innovates, it has to elevate those stories because we need to change mindsets. We at One believe that investing in Africa is a return on investment, not a risk. And that if we can actually elevate the stories, the success stories, the learnings, but even the learnings through failure, that we can actually change narratives and reduce the risk premium and crowd in more private capital. And for me, that is key. And the investment in women as cross-cutting, the investment in climate resilience, which I was proud to see is still being used in some countries like the UK, keep it up, and the investment in energy access and growth, for growth, inclusive jobs for young people has to be underpinning in this strategy?
Leslie, I mean, yeah, sorry, you want
I
to...
was going to say, BI has had a very proud history of playing a pioneering role in mainstreaming gender lens investment. You might know that BI was actually one of the founding shareholders, created 2X at I think it was the G7 hosted by Canada. So over the last number of years, not just sort of brought gender lens investment as a mainstream theme within the DFI community, but mainstreaming it in the world of finance more broadly. And as Ndidi and as you've just referenced, we will now be increasing the ambition.
Yeah, but Ndidi also mentioned energy access, and I noticed there was a lot about energy transition, and also we heard from Shirin about, you know, what's going on in Asia. You mentioned the British Climate Partnership, this new initiative. But there's a lot of talk about transition, and you hear increasingly a lot of people in Africa saying, actually, it's not so much transition we're interested in, it's energy, access to energy. And you say, you know, 1 billion people in the world don't have access to electricity, 600 million of those are in Africa. But we are seeing a shift, aren't we, in the debate? I mean, you said UK, carry on flying the flag, but even today, you know, the G7 under the French presidency says we might start discussing new oil and gas. You know, Norway is keen to do that in the Arctic. But there's this more ban on investing in fossil fuels. And I wonder if you think over the course of your 5-year strategy, whether you think that might change.
I mean, I'd start out by saying that the economics of investing in clean energy absolutely makes sense today. The price point, the price of solar panels, the price of batteries, the price of wind turbines, the cost curve suggests that it has been and will continue, it seems, at least for now, that it is the most economical path in terms of providing clean energy in many of these markets. As you know, there is, with respect to energy, in Africa, it's about energy poverty, right? In Asia, it's about transitioning away from coal. So we're bifurcating and we operate in these two regions. In Africa, we are very excited about the progress we are making in terms of working in a partnership manner. We have both a company, a platform company we created many years ago, Globelec, on the sort of power generation side, which we own together with another DFI called Norfund. And then we also have a company that we own 100%, which is focused on transmission. Even if you generate power, you still have to get the power to the point of demand, you know, to the factories, the households, and so on. So we created a company that is pioneering new business models, that is looking at mini grids, solutions or new business models to innovate for the unique conditions that face Africa. So microgrids and mini grids is something that company specializes in.
And that's what you're sticking with. Okay,
Yeah,
good. I'll come to the audience in a moment. We're also getting questions online from our online audience. Hello, by the way. I didn't say hello to you. How rude of me. So Hans Peter, that you are also hearing that, you know, with this new shift in development aid, as it were, that perhaps targeting those in extreme poverty are being overlooked. That's, you know, not so much in people's sort of, you know, eye line anymore. And when you talk about the private sector and, you know, value chains and so on, if you think about Africa, for instance, only 10 to 20% of smallholder farmers are commercially viable and so on. So do you feel that perhaps the zeitgeist that we talked about, including this 5-year strategy, perhaps does overlook those in extreme poverty?
The zeitgeist definitely does. The more commercial approach that we're now kind of seeing is hard to implement in the more difficult countries. So there's clearly a bias. You don't mobilize private capital easily in Yemen or in Somalia. So the focus, if the target is to mobilize capital, is always going to be towards markets that are a bit more developed. And so there's this bias that we have. And I want to be with Ndidi actually on this question. What we're talking about here is not replacing the loss of ODA. It's just a different story. ODA is in social sectors, it's humanitarian in its vast majority. There we're having the cuts, there we're having the pain. When we're looking at investment, at the more commercial models, it's in other sectors. It will, over time, provide a basis for countries to solve their own problems, but it doesn't replace it, right? So that's important to take. I think that the fact that BII is putting least developed countries at the center as one of the three big shifts of its strategy is extremely welcome, and for the reasons that you mentioned. Also because it is going to require a very significant investment. It's costly to operate in these countries. To reach these farmers that you're talking about, you don't do that through regular commercial means. So BII plus and the fact that you're giving this such an important role in your strategy, the programmatic approach that you're taking a long view, you're looking at the various aspects, you're trying to lower the cost of operating there through the other instruments that you have is very important.
Right, good. Okay, thank you. Can I see if there are any questions that are interesting? Lord Collins. There's a microphone. Although
Listen,
I
very much welcome the strategy, and certainly in terms of what the Minister previously said in terms of the Africa approach. But one thing that I absolutely agree in terms of building markets. But when I visited the 19 African countries when I was Minister for Africa, there was one common message about building markets, is the barriers to trade. And the statistic that shocked me most was that only 18% of trade within the continent was between the continent countries. So the barriers to trade are not what we normally think, but they're very much within the continent. And how are you going to build markets without addressing those barriers?
Sure.
So how are you collaborating with particularly the Africa Free Trade Agreement and others, and the African Development Bank, to address those barriers to trade?
All right. Do you want to answer that, Leslie? And in the meantime, just hand the microphone to the gentleman at the back there. And then there's a lady there.
Thank you very much, Lord Collins. I mean, at the heart of what you were saying is the need for the critical, if you like, trade-enabling infrastructure that really underpins what's required to achieve that outcome. Infrastructure is indeed, foundational infrastructure is central to our business model and is a core sector of BII's investment strategy. We have three broad sectors: financial services, infrastructure, and climate. And infrastructure include, roads, transport. We invest heavily in ports for the logistic change. We invest in digital infrastructure, and we do so in a manner often to bring and crowd in the other development finance institutions, because infrastructure is central to the development finance model. But you are spot on. A country cannot develop and grow on its own. No country is endowed with the necessary or have the necessary endowments to grow by itself. It needs to trade, it needs to leverage off its own comparative advantage. So in short, we do make that core infrastructure, especially logistics and upgrading of ports and the building of ports. We're building, for example, the first container port in DRC at the moment, which will have a significant developmental multiplier effect in the DRC, as an example.
Regional markets are very important in Africa,
exactly.
aren't they? Exactly. Not just continent-wide. Yes. Do keep your questions brief. I may take a couple and then come back to the yeah.
Thank you. Johnson Setu, Director of Diplomacy and the Co-Chair's Office at C40 Cities, a network of close to 100 mayors who are working together to tackle the climate emergency. Thank you for had the opportunity to feed into the strategy. So it's welcome to see actually the importance of climate resilience recognised, and also the work on subnationals as well. I would say in terms of my question, so we know access to information is an important piece to the puzzle. And so my question is simple, which is, how do you ensure that this strategy is as real to the rooms in Accra or Freetown as it is here today?
Okay, thank you. Let's take a second one. All the questions are for you, Leslie. Oh, surprise, surprise. Yes, gentlemen. Oh, no, sorry, this lady here was first. Yes, sorry, go on. Do introduce yourself if relevant. Yeah. Please.
Thank you very much. I'm Diane Friado at the Ghana High Commission, Head of Trade and Investment. Let's say I'm really happy with the work that you're doing in Ghana, and I also support you that leaving the work of policy negotiation and other things to the World Bank and IFC, so that you concentrate on what you are doing. And my recommendation when it comes to the trading among Africa is the main challenge has been logistics. And I also see it as an opportunity for investment. Like traveling to African countries, you have to go roam. Who is taking advantage of that? And I think it's a nice opportunity for BAI and any investor to come into it. And there are a lot of opportunities in Africa. And business regulation reforms, that's what I was handling. And in Ghana, we have a portal that we've populated all our business regulation, and every regulation that you need, you can find it at bal.gov.gh. I'll leave the message with BI. Thank you.
So we'll take that as an invitation, not a question. Just hand the microphone to Sarah there, and we'll take the gentleman, and then we'll come to you, Leslie. Yeah.
Yes, my name is David Marsh from OMFIF. We're an organisation that does a lot of work in Africa, and it also gender balance come to that. But the question is, again, to Leslie, you speak very beguilingly about the idea of additionality and getting more players, catalytic effects, etc., all the sovereign funds, the pension funds, all these other big pools of capital. How are you going to make the selection of these people? Are they just friends of yours that you bump into, or do you have a more methodological process? And also, would you have qualms at the moment in getting large sources of Chinese capital under the appropriate safeguards, etc.? Because after all, they do have a big track record in Africa. They're not always well liked. The British are, on the whole, relatively well liked, don't have much money. So it might be a good marriage.
You're a former CFO of the New Development Bank, aren't you, Leslie? So maybe that question about who you would engage with and then how you communicate in Accra and Freetown.
Sure. With respect to the institutions, there are large pension funds, insurance capital, sovereign wealth funds throughout the continent. Just a few weeks ago with the board, we visited Nigeria and we spent time with the Nigeria Sovereign Wealth Fund as an example. In the large markets in Africa, markets like Egypt, which is the largest country of operation for BI, Nigeria, South Africa, Kenya, there are established, Zambia I made an example of as well, pension funds that we have strategic relationships with already. We are now just deepening our engagements with these institutions. There is a desire on the part of those funds to diversify. They are seeking yield, they are seeking diversification, and they want access to other asset classes outside of the government security, which by regulation they have to invest in larger sort of volumes. So with regards to how do we partner, we have already in place, for example, the Public Investment Commission, which is the largest one on the African continent, and I see the Deputy High Commissioner from South Africa here. We have a structured partnership agreement with the PIC to enable and facilitate, because we have origination capacity throughout the African continent. They are only based in Pretoria, in South Africa. They've got a desire to invest in the entire continent, and therefore we have this partnership in place with them. The short answer is these are not friends of mine. These are institutions that are from each of these countries.
And then very
with
quickly,
regards to the how we, on China, the UK has and BII has a particular operating and business model which is anchored around the theory of change that I outlined early on, and this is private sector led. Private sector is at the heart of what we do. A state-led development model is not quite appropriate or in sync with the development perspective that underpins our work. That's in short how I would answer that. With regards to the ownership, BII is this one player, one actor in the entire ecosystem. And we are not the ones developing the economic development strategy for Ghana. We are going to go on a path of ensuring that our plan, our country-specific capital allocation for Ghana is in sync with or broadly speaks to the development priorities of the country. So we will aim to broaden the, and in fact we're going to have a launch of the strategy in Kenya, we're going to do it in Egypt. So in each of our key markets, we will be engaging with our partners there. We also engage with the British High Commission in each of our markets for where FCDO is located to structure those creative partnerships. There was an invitation there.
Thank you. Hans-Peter, very quickly.
Yeah, since a bit unfair that Ndidi and I am not getting any questions.
I know.
So I just wanted to,
Just
but I wanted to
jump
pick
in.
up, say, on David Marsh and some others, the question of, so who do you work with? Who do you mobilize? And there, that the strategy is, I think, is right on the spot. The instruments that you're using are on the spot. The ambition with respect to how much you want to mobilize and from whom, there's upside in that, in my view. So you look at so GFIs more generally. Targets for mobilization today, they go well into the multiples, to 2 for 1, 3 for 1, 4 for 1. The BII strategy speaks essentially about 0.4 for 1 in core mobilization and 1 for 1 in general mobilization. And BII has been really a pioneer in developing concepts of mobilization. Some of the most influential works really have come out of here and have inspired what others have done. So that's sort of one area where I wanted to suggest you could perhaps lift your sights even further.
You're getting interrogated on both sides and from the crowd here too, aren't you?
Just quickly,
Yeah, Ndidi.
just to add to that, wearing my hat as an entrepreneur and former investor, I think as you look to the least developing countries and your commitment to galvanizing more resources, partnering with local institutions, you've mentioned the pension funds, but also local fund managers are critical. And I know you've done that historically, but we want to see a deepening because they're the closest to the market, they understand the conditions, and they're there through thick and thin. And that the Funder Plus model that you plan on, I think we need to have high ambitions for that
I
as
wonder
well.
also, do we count development philanthropy? Because, I mean, that has got a huge role to play. I mean, when you look at the Gates Foundation alone, 12 billion every year for till 2030 or whenever it is,
Oh, sure.
So development philanthropy is not...
Philanthropy is a significant new component within the development system. It is an emerging formation in Africa, not as large as the US, for example. I mean, I was in the spring meetings last week and I listened to one talk where I was told that Mackenzie Scott last year alone allocated $7 billion, and since she started her philanthropic activities, she has already allocated 26 billion. These are significant numbers, right? I mean, it dwarfs a couple of DFIs together. We do not have that scale yet on the African continent. Tony Alamuli.
They're trying, though. It's very small,
isn't it? A number of them have foundations, but not quite at the same level. But we see them as an emerging actor within the overall system. But I agree fully with your challenge for us to stretch and raise the ambition. Let me be very clear. On the British Climate Partners, the multiple that we are seeking there is higher than core BII. So the one-to-one reference you've made is a minimum overall target for BII for the full BII portfolio.
Okay, just very quickly a question online, Alice Chappell. This strategy requires effective risk sharing between public and private investment. How can BII ensure that it's taking the right amount of risk where needed to mobilise capital for places and sectors that need it most?
With respect to risk sharing is at the heart of ensuring that we succeed in the private capital mobilization endeavor. Srini, earlier on when he spoke about private capital mobilization, made the example of this $1 billion fund in January that we announced. That fund we anchored, we were part of the co-creation of that fund. We actually only placed $40 million into that fund. It's concessionary capital, and we're able to mobilize several other DFIs for $150 million in total, and that was mobilized 6 times. So the $1 billion fund was made possible by a $150 million junior tranche. So this idea of de-risking and risk sharing is at the heart of the new business model.
Absolutely. Sarah?
Thanks, Zeinab. Sara Pantoliano from ODI Global. Leslie, congratulations on the strategy. Yes, it's ambitious, but ambition is what we need right now. And I think if you focus on delivering with partners, you can realize the ambition. I'm going to press you a little bit on the frontier markets, though. I've heard it throughout the morning, and it's really welcome to hear this focus on frontier markets. But the taxonomy can be vague, and a lot can hide behind frontier markets. And you know that countries affected by conflict, emerging from conflict, are particularly dear to my heart. And those are the countries where it's impossible to get the first movers, where the cost of capital is beyond unaffordable. Well, quite frankly, yes, of course, you can't invest in an acute emergency, but countries have been in a situation of protracted crisis for 20 or 30 years, where they've got very long-standing development crisis, displacement crisis, sorry. Humanitarian aid is not what is needed. What is needed is investment, and yet it's impossible to get that investment. How much of that is part of your frontier markets?
The first point to make is that, credit to the UK government for giving us the overall political mandate to continue on this path, because if you look at the UK's political missions as they've outlined, leaning in and having greater resource allocation to these markets is vital. The second point to make is that, as I mentioned, we are just one actor within the ecosystem. We have started a number of years ago an initiative called ARIA, where together with Proparco and FMO, we already joined at the hip, where we create a pipeline together. We look at what are the specific structural barriers and impediments in that market. These markets each differ. As you know, Burundi is very different to Sierra Leone, very different to the DRC. Levels of fragility, conflict, level of development of the institutions. Our task now, as Maria has outlined earlier, is about building durable markets. We need to have some humility in going into these markets. We will not be able to transform the fortunes of these countries through our interventions. Ultimately, as you know, development is locally owned. It's about local institutions having functioning the democracies, having the political fabric of a country involves civil society formations, entrepreneurs, and so on and so on. So we're very modest about what we are doing. We have particular skills in investing in private companies which grow, provide jobs. These companies then in turn pay taxes. The government is able to recycle those taxes into education and health and other infrastructure. The key point I'm really making is that it is challenging, Sarah. It is very difficult to invest in these markets. At best, we want to play a catalytic role to create a halo effect so that others can also come in and create the conditions for new investment. I mean, Lord Collins has been to, as you mentioned, 18, 19 countries in the space of 9 months, and we've learned a great deal from him about the particular barriers, and we are now studying those barriers closely. And over the next 5 years, we hope to go on this journey of providing the ingredients for lasting, durable change in those countries.
Okay. Any more questions from the floor? Yes, gentleman there.
Thank you, Leslie. Congratulations. And I think the British public will hopefully rally behind you. Reading your Telegraph piece this morning, Ed Davey, WRI, I thought this is a story that might resonate with the British public, whose support we need for international collaboration of this kind. I wanted to ask a variation of Sadat's question, but in fact I'm going to ask about restoration and protection of nature. Reading the strategy, there's a very clear section about climate and nature, and there's a sort of do no harm principle in a sense. But I wonder if you also see opportunities for proactive investment at scale in the protection and restoration of the natural world in partnership with communities and farmers, etc. Thank you.
Absolutely. You are spot on. Over the last year in particular, and it was specifically captured at COP in Brazil last year, for me, the single biggest outcome from the COP in Belém was the significant focus on natural capital. One on adaptation. As you know, in the development finance world in general, there's been a disproportionate focus on climate mitigation, investing in solar power, wind power, and sort of renewable energy. Less focus on adaptation, and we've done a great amount of work as BII to promote more investment and make sure that adaptation is part of the core design of mitigation. On nature, nature is a vital element of the next phase of the evolution of climate finance. We will work in partnership with several of the other players who have much deeper capability in the natural capital domain. So it's an area where we are building capability, and it is a core part of the areas we want to play in going forward.
Hans-Peter, you wanted to come in, and Ndidi, if you do also. Yeah, Hans-Peter.
Yeah, so on both this question of the more fragile states, sort of the most difficult end of the least developed countries, and the question of nature, these are sort of frontier areas for private investment, for going into. And where I think the strategy is absolutely on the spot, and I said that is, if you go into these, you have to have a long-term programmatic approach. Just to come in with sort of one opportunity because there's one that pops up and then you can react to it is not going to make a difference. And so the fact that you plan on a smaller set of countries because you have to act within your capabilities, but then go into it in a very intensive way, using all these instruments, and I'm coming back to BII Plus, which I think is a very high quality instrument, kinetic catalyst. You can use these other instruments to do that. It's very important. Yeah. So this is the approach to frontiers, whichever sectors or countries that you
And I wanted to just add that response on philanthropy also says that philanthropy can come alongside to de-risk even BII as you go into fragile states. And I think your team should definitely take a look at that, because globally and within the continent of Africa, philanthropists are willing to come alongside private capital and more patient investing. And the BII plus what the local philanthropists and global philanthropists are willing to put for nature and climate, health, and energy transition and energy access would be key.
Domestic private sector is so important, isn't it? I mean, people talk about FDI and so on, but what's going on? And we know a lot of local banks, frankly, don't lend money to their businesses in their own country. So just a closing question to all of you then. So you alluded to this earlier on, Leslie, but I'll start with you, Ndidi, is how would you measure success? Here you are, you've launched your 5-year strategy, 26 to 31, and you're going to pledge between £7 to £8 billion in that time. How will you determine whether you've succeeded or not, and worried about, what might derail your strategy? And Ndidi?
So I'll be looking to three things. The first is how many markets are working. I like the term making markets work and catalyzing sectors. When I heard your Asian leader talk about that's the sectors that BII has come into and made efficient, effective, and galvanized new resources, that's key. Number two is how much money you've been able to galvanize alongside others. But number three, the lives changed. Ultimately, at the One Campaign, we care about healthier lives and economic opportunities. And many times, money is far removed from impact on the ground. And we want to see lives change and improve jobs created and ecosystems shifting.
Okay, thanks. Hans-Peter, what will be making you applaud BII in 5 years?
Well, it's what Ndidi says, really. And one thing to add, there are various aspects to success. So it's not just the amount of money that would go in or any of these. And so what Maria is working on, I think, is particularly important. It's to describe, when you enter a program, a project, an initiative, to describe where you want to go in a sort of qualitative way, create a narrative around what you are trying to achieve, and then confirm that narrative with whatever pieces of hard facts you can get over time. But it's about confirming narratives over time.
Final word to you, just a few seconds.
Brief, we have changed and altered in a very deliberate way our metrics of success. Going forward, when we come here next year, Zeinab, when we have this sort of review and a scorecard, we will no longer be talking about how much capital we have deployed, but how much have we mobilized. And over the next 5 years, we've got an ambition in total of deploying roughly 8 billion, which maintains the pace of investment of the last strategy period, despite these cuts in aid. I think we're very proud of the fact that we can, and then additionally mobilize 7 billion. 15 billion is a very material number come out of BII. Secondly, on frontier markets, we have a very clear target, 25% minimum, and on market level impact, as difficult as it is, but we will assess. The give a bigger weighting to assessing the market level ecosystem impact we're having.
We wish you all the luck. We hope you've got long coattails that everybody will hang on to. Please let me invite Diana Layfield, Chair of the Board of BII, just to... You kicked off, so maybe just a couple of remarks.
Absolutely. Well, first of all, thank you to Zeinab, Ndidi, Hans-Peter and Leslie. I felt that was an incredibly interesting and I hope inspiring panel. Just three quick closing thoughts. The first is to underline Leslie's point about the underpinning nature of partnership to this entire strategy. That is partnership with the companies we invest in, with the policymakers and communities and countries that we invest in, but also with you as partners in the development space and those beyond this room. The second is just about experience. And it's very hard when we're sitting in a room like this to talk about the kinds of investments that we make and the transformations that are affected. It all feels a bit dry, but I see Graham over there who championed a lot of our work in Nepal. If you see and feel this impact, it is truly different, and Lord Collins has also travelled widely. You can't all go to all these places, but to the extent that you can see them, even by seeing some of the videos, seeing some of the work that is shown on our website, please get as close to touching and seeing and feeling it as you can. It is really remarkable. The third is thanks. Not just to you, who I've already thanked, but actually to the BII team and Leslie. This is a remarkable organisation with incredible people who have a commitment that is very hard to understand until you experience it. They live, breathe, eat and sleep this, and they are truly extraordinary. So a huge thanks to the whole organisation at BII. As I think you've heard, this is an ever more essential mission for us to deliver on. The team, supported by the board, will absolutely do their best to deliver this over the next 5 years. So I hope you will join me in wishing them all the very best of luck. Thank you.